CoinDesk is out with a new research report recapping some of the key themes and metrics from 2022's progress in crypto. Joining us now to discuss is CoinDesk Research Associate George Kaloudis. Welcome, George.
What's going on, guys? It's been a while.
Oh, yeah, it has
been a while. Happy New Year.
Yeah, happy New Year, guys.
Well, it's a Happy New Year if you think that it won't be like last year, because last year was horrible for anybody who hodled anything, pretty much, right? I'm saying this from personal experience now, because as I might have, I brought up earlier, at the beginning of 2022, I put $100 into every single coin traded on Coinbase just to see how that would go. I lost my shirt. I didn't just lose my shirt. I lost my whole closet. So what exactly, let's talk about this. Bitcoin, I know you're a big Bitcoin, we were talking right before the show about how you're like the ultimate maxi. What did you guys do? You lost everything.
Yeah.
What happened?
But the max is supposed to tell you to zoom out, but I don't know. 2022 was terrible, right? We had 2019, 2020, 2021. Everyone who owned crypto looked like a genius, right? It just kept going up and to the right, new paradigm. And then all of a sudden this year is a tough one, right? The high for 2022 for Bitcoin was basically at the beginning of the year. And then it just started grinding down like this, just slowly going down until it hit around this 16 to 17K range. And now today, we're going up 2 or 3% and everyone is euphoric. So of course, we're going to come back down right after that. But
almost outpacing inflation for the year.
Almost outpacing, right.
Almost outpacing inflation for the year. That inflation hedge known as Bitcoin. And of course, it's not just if you bought the coins themselves. Actually, we have this the resilience chart here. So it shows that the network itself is doing well. I guess the ultimate problem, though, is no one cares.
Yeah. And we've talked about the price coming down. We've talked about hash rate coming up. There are companies out there, publicly traded companies, who mine Bitcoin. And in doing so, clearly their profitability is going to be coming down because the thing that they were mining has become less valuable. Interest rates have gone up, so it's been harder to, prop up their operations financially. And then somehow, based on this hash rate chart going up, 46%, it got even more competitive. So mining as a business is far less profitable than it was last year, right? We're seeing the financialization of these companies hitting these companies. We're seeing this lag from last year's bull market where everyone wanted to get into Bitcoin mining. All these machines were bought when, Bitcoin's price was 60,000, 40,000, whatever. And now it's finally coming online. Now it's becoming more competitive. Hash rate is even higher. This thing called hash price, which is the amount of money you're expected to get from your hash rate, is going down. It's just tough out there. So you've seen these Bitcoin mining companies that are publicly traded. Some of the best performers like a Clean Spark, which is a big Bitcoin mining company, they lost 80% last year. So if you're trying to, a lot of people talk about in crypto, they want to get into the picks and shovels, right? They think they're smart when they say that. And they got into these picks and shovels businesses, the Bitcoin miners, and they did worse than just buying the gold, right? It's tough. It's tough out there.
Picks and shovels. I mean, quite frankly, it's not the picks and shovels, because those guys would have bought the chips, right? Because at least those could be used for gaming.
You know what? That's a very good point. But, in Bitcoin mining, you can't even use those chips to do anything else, right? They're application specific. They're meant to do one thing and one thing only, and it's to take in electricity and make Bitcoin, or try to make Bitcoin.
What can you tell us about, altcoins? Ethereum especially did really well at the end of the year, considering its implementation of the merge.
Yeah, the talk of the town for Ethereum was the successful implementation of the merge. They finally moved away from proof of work to proof of stake. And I think, and they also changed the way the monetary policy works. I think there are 3 things that we should think about here. I think it's remarkable that it even happened, right? This is a big behemoth with a lot of people coming from different angles, supposedly decentralized. They still pulled together this very big technological upgrade. I have actually been on record saying I didn't think it would happen this year. Look at me eating my words. I think it is also probably good for Ethereum, and I'm going to get destroyed by my maximalist friends for this, but I don't really think there's appetite for two large proof of work blockchains with a Bitcoin and an Ethereum. So I think it's good for the longevity of Ethereum. They need to move away from the energy intensive consensus mechanism. But I do think that it fundamentally shifts what Ethereum is going to be. I don't think that it can be money when the monetary policy, which was implemented with the merge, goes from a place where it is predictable to almost unpredictable, right? Everyone in Ethereum starts talking about the ultrasound money meme, right? Theoretically, the amount of Ethereum that's going to be burned is going to be higher than the amount of, Ethereum that is being burned is going to be higher than the amount of Ethereum that is going to be minted. And so, ultrasound money, we're going to have a money supply that is falling and closing. And so we're going to all share one ETH amongst each other. It's going to be worth $1 trillion. It doesn't make quite much sense if you want to have a hard money and have a monetary policy that is unpredictable, or at least not perfectly predictable, right? If you believe in hard money, that is.
And meanwhile, it was a strange year in the world of policy. Tell us why that is.
Yeah, I'm not sure if Nick's coming on the show later, but if he is, you should ask him more questions about this. He's far more valuable of a guest than I am. But policy to me this year was very much, the classic modern American politics in my view, right? Lots of posturing, but no strutting. They weren't really walking around with that good posture. We do have MiCA in the EU, which is moving towards law, but there have been a bunch of bills introduced, a bill to regulate stable coins, Joe Biden with his executive order to do something, Liz Warren proposed bills that would make my little brother a financial institution, right? It was all disjointed. It was all a lot of people saying, we need to regulate this, regulate this. I think there may be two things to think about here. One, and it's the big elephant in the room, SBF was sort of the face of, he's the good guy in crypto. He's going to the hill and he's being the guy who's going to get real good policy in place. And it turns out that he was maybe allegedly doing some bad things behind the scenes. So maybe some of these politicians had their reputations bruised or their egos bruised. And also, quite frankly, we talked about the price of Bitcoin and everything going down. Crypto's smaller now. Once things start leaving the mass consciousness of the retail market, maybe these politicians start caring a little bit less. So they move on to more important things like trying to figure out how to get a Speaker of the House. Not quite sure.
Finally, when we take a look at venture funding raised by blockchain and crypto companies, that actually increased in 2022 despite the cataclysmic collapse we saw at the end of the year. Which is interesting.
And this chart specifically is giving me sort of these bad flashbacks, right? This data is more difficult to pull together than it would be to say public markets valuations or the M&A value that these public companies went through. So if it went up by this much, it depends on who you talk to because the data is just a little bit spread out and less dependable than public markets things. I would say that there wasn't this dip in venture funding that there was in crypto tokens because of two main things. People in venture, they are theoretically at least investing in companies and not in tokens. And a lot of the capital that is raised for these venture funds and these private equity funds happen in the past. And we just had 3 years of up and to the right. And all these big, classically successful funds started raising crypto funds. And they had this money that they needed to put to work. And they were looking for yield. So although the price of Bitcoin was going down and to the right, the price of everything is going down to the right, they still had to, put money to work. And let's be honest, if you like, or at least tell your LPs that you like crypto when it's near $2 trillion of valuation, won't you love it at 800 billion? Won't you love it at 400 billion, right? This is a however big total addressable market. So that's where I think that came from.
All right, we'll see what happens this year. George, there's a fire sale out there. Thanks for talking about it with us. That was CoinDesk Research Associate George Kaloudis.